We hear a lot and talk a lot about real estate on the Wealthability Show. And particularly, we've talked a lot about residential real estate, multifamily, single family, et cetera. But rarely do we get a chance to really dig into commercial real estate. And today, we're going to discover how to maximize profits, minimize taxes on commercial real estate. And we have two of the most impressive, experienced people in commercial real estate in the US, if not in the world, Bob Knakal and Rod Santomassimo. And so good to have you guys with us today. Thank you so much for taking time. You guys, I know you guys can be out doing deals, so really appreciate the time. I know you wrote this book, Selling Buildings, which is a great book for, I love the title. It's like truth in advertising. Totally great. So if you would, there you go. There it is. If you would, starting with you, Bob, give us a little bit of your background and why you decided to write a book on this.
Sure. Well, Tom, first of all, thanks so much for having Rod and I. Really appreciate being on the show. And hello to all your listeners and viewers. So I'm Bob Knakal. I am the chairman and CEO of BKREA, which is a company that I formed about 16 months ago. I've been a commercial real estate broker selling investment properties in New York City for 41 years now, and absolutely love the business. Got into it by accident, but it's been the greatest accident that ever happened. I truly love it. I feel like my full-time job selling buildings is not only a job, but it's my hobby, and couldn't be happier doing it and get to meet and interact with a lot of great people every day, including my co-author, Rod Santomassimo, who's actually been my broker coach since 2011 and one of my best friends. So again, thanks for having us on today.
No, thank you, Rod. So a little of your background.
Yeah, Rod Santomassimo. Tom, thanks so much for having me. I run a company called the Massimo Group. We are the premier commercial real estate broker coaching organization on the planet. We're fortunate enough to have incredible clients such as Bob Knakal. And yes, we do. We help brokers make more money in less time on the commercial side. But before we move forward, I think, for your audience, just to put things in perspective, BK, how many buildings have you sold so far in your career?
As of 2 weeks ago, 2,351.
2000, so everyone understand this, 2,351 divided by 41 years of commercial real estate experience means that Bob has sold personally with his team over one building per week for 41 years straight. So Bob doesn't like to toot his horn, but he is the GOAT of commercial real estate brokerage. He is. We coach folks all over the planet. We do. He is the GOAT of commercial real estate brokerage. And when it comes to selling buildings, he's the man. It's pure and simple. So let's go.
Thank you. This is awesome, guys. So if we can kind of just start the kind of basic stuff, why do you love commercial real estate? What makes commercial real estate unique? What makes it, Bob, you said it's not just your job, it's your hobby. Why commercial real estate over any other kind of real estate?
Well, I will tell you that for me, it's commercial real estate because it's the only real estate I know. I don't know residential real estate. I've never been a residential real estate broker. And why do I like the business? Several reasons. It's an extraordinarily competitive business. It is a very, very pure form of meritocracy. You get out of it exactly what you put into it. And there are a lot of wins along the way that become addictive. It's not just about closing a deal. They talk often about kids on cell phones and why they're so addicted to cell phones is because of this dopamine rush that they get from different interactions. And I will tell you, Tom, I get the same rushes in the brokerage business. And you get that rush when you find out, you call an owner and they say, hey, I'm thinking about selling my building. You get the rush. And then you put your presentation together, go meet with the owner, and they say, yeah, I'm going to hire you. You get the rush. And then you're marketing the building and you get somebody to make an offer that will be accepted. You get the rush. And then you sign the contract. You get the rush. and then you close the deal, you get the rush. And that's just on one deal. I'm doing 50 deals at once now. So you're getting these dopamine rushes of positive feedback in this business. And yes, there comes even more rejection and negative stuff than these positive things that happen. But there's so many positive things that go on that is just, to me, it's very, very rewarding, fulfilling, and I just absolutely love the competition of it. We've always looked to hire people who were active in team sports, because not only are team sport athletes generally very competitive, but you know how to work well with other people, and this is a business you cannot do by yourself. Rod mentioned my team and I over the 41 years. I've had a variety of teammates for 26 years. I had my own company, Massey, which we sold in 2014, and back to having my own firm again. But I've worked with a lot of great people over the years, and I owe a lot of my success to them as well.
So when you're looking at now, Rod, you're coaching this. When you're looking at a commercial real estate deal, outside of the obvious, good tenants, cap rates, all that kind of stuff, what are you looking for? What makes a deal a good deal in your mind?
Well, I'm gonna let Bob answer that question because I don't focus on the deals. I focus on the people. That's just what we do here at Massimo. The reason we do commercial real estate is because, as Bob said, it's the greatest entrepreneurial business there is. So, but from my people standpoint, it's amazing. They probably don't look at, and Bob will correct me here. My clients don't focus on such things as cap rates and returns as much as the location and the quality and the opportunity of that real estate across anywhere in the United States. Could be in Scottsdale, could be in Sedona, could be in Brooklyn, right? It doesn't really matter from that standpoint. The professional investor will focus more on the institutional investor who's not necessarily your audience, or most commercial estate investors, right? They'll focus on those elements of return and so forth. But they got to be comfortable that it's going to be an asset. They can see the use, they can see the adaptation over the years. It's going to happen, right? That's what they're looking at. But BK, how about you? What are your investors focused on commercial real estate side?
Yeah, well, I would like to answer this two ways. One, like, what makes a deal a good deal? And basically, a deal is a good deal if an investor thinks they can make money by buying it. And I often say that in order to buy buildings, you need two things. You need capital and you need courage. And the courage becomes more important in markets that are uncertain. But basically, if someone believes in the deal they're buying and believes they'll make money in it, and similar to brokerage, where I think it's a highly accretive quality to specialize in something, to be a true market expert. I think on the investment side, I see the same thing, where investors who buy one type of deal in one type of location generally tend to be dominant because they know every little thing about that. Yes, there are some companies that are so big that they have these specialists in a lot of different areas, and they can buy office buildings and hotels and apartment buildings and a bunch of different things, but they probably have somebody that's an expert at that one particular product type. And that kind of dovetails into, I'd like to talk a little bit about the characteristics that I've seen in brokers that really excel in our business. And Rod alluded to it, but there's three characteristics that we see routinely in people who are at the top of our business. First being, they are a true expert at something, a slice of the market that is small enough that you can really get your arms around every single aspect of it and know everything about it, yet large enough you can make a good living.
So if you would, Bob, give us an example of that. Just give us an example of a slice like that.
Okay, well, like I sell in New York City, I sell development sites, which basically are land deals, or what you in most markets around the country, you call them land deals. Here, we call them development deals because there's not rolling pastures of land in New York City. So we have to buy a crappy old building or a bunch of little crappy buildings, knock them down, and create a piece of land on which to build a building. So it's a thin slice of the market. So not only do we focus on that one type of building, but everybody has their own geographic area they work on. So they're doing one type of transaction in one specific geographic area. And that gives you the ability to differentiate yourself from everyone else. And that differentiation leads to a competitive advantage. And that's what we're all trying to do, is get a competitive advantage. So expertise, number one. Number two, passion. You got to love this. I love this business. I think people who really excel at it have to love it. Why? Because no matter how good you are, you're going to have tough times in this business. The market is naturally cyclical. There's going to be ups and downs. Through no fault of your own, you're going to go through some tough patches. And it's that passion and love for the business that keeps you going and keeps you around for those times when the market gets better, which they inevitably will, but you have to be there. And in order to be there, a lot of folks drop out of the business when things get tough, but if you love it, you won't drop out. And then the third characteristic is being able to use discipline well. And I say use discipline as opposed to have discipline, because we all have access to the same exact amount of discipline, but we all choose to use it differently. It's the folks who can use discipline to, as long as they're doing fundamentally correct things. You have to do these things, a lot of which are not that glamorous, but you have to do them over and over and over again, day after day, week after week, month after month, year after year. In my case, decade after decade. But you have to keep doing them, have the discipline to keep doing those fundamentally sound things, and eventually that will pay dividends for you. So those are the three things, and I think that they're probably very similar on the investment side. It's expertise, passion, discipline, those three things. All top people have those.
Yeah, I love the way you talk about focus. We in my company, we talk about focus all the time. You've got that, what way I've seen over the years, and I've been in my business 45 years, and I see hundreds of thousands of investors and entrepreneurs. And what I find is that those that are that focused and really gain that expertise and that passionate, they're always the ones who win. It's the ones who are trying to scatter themselves all over the place that tend to lose. They're the ones who are losing money, where you guys are out there making money. And so let's talk about a tough time. So talk about changing markets. So New York 2020 became a ghost town. And since then, the whole world's changed. I mean, we have people working from home. We have people working, remote, part-time, et cetera. Would you talk a little bit about from your perspective, how's that changed the commercial real estate market?
Sure. Well, Tom, I think that's a great question. What I would recommend, if you really want to get very granular on this topic, buy Rod and my book, Selling Buildings, because we talk about what happened in the markets during the savings and loan crisis in the early 90s, during the recession in the early 2000s, and after 9/11, particularly in New York, and the GFC and the pandemic. And we talk about what things were like during each of these times, which were challenging. But I think back to the savings and loan crisis. We ran our company on credit cards for 3 years. I ran my personal life on credit cards for 10 years. You go to 9/11 and the recession that we were in at the time, and we made a very bold move at that time. Every other company in town was laying people off and downsizing and taking a wait and see attitude. We went out and hired a director of HR, which we hadn't had up to that point, and said, go out and hire all these people. The market's going to bounce back. Let's be ready to take advantage of that. And when everybody else was downsizing, we were growing. And when the market started to get better in 2003, we were perfectly positioned to take advantage of it. During the pandemic, I took that opportunity to do something that has been the single greatest marketing thing I've ever done in my career, which was to actually go out and spend 220 hours in the field walking every block of Manhattan, south of 96th Street, on the east side, south of 110 on the west side. I've created what I call the Knakal Map Room, which has a gigantic map that's 24 feet long, 10 feet wide, it's highlighted. I had sections of this thing out in the field with me. It is an analog map room in a digital world, but it is so impactful on people. And I wouldn't have had the time to do it or the ease with which to do it other than during the pandemic when there was no business going on and there was nobody in New York City. It was a ghost town. So it was a perfect time to go out and do that. Historically, over the course of my career, I've given over 10,000 pitches. I've won historically 26% of those pitches. But when I've been able to get clients into the Knakal map room, I've now won 39 out of 39 pitches, 100% success rate, because that giant piece of paper very clearly demonstrates a market knowledge that is beyond the depth that anyone else has. And that's really, again, that's that expertise component that if you can have the expertise and be able to articulate the expertise, gives you a tremendous advantage over others. And so we look at these times when things were tough, and those are actually times that are filled with great opportunity. And we got very lucky to have good credit in the during the S&L crisis. Made a huge bet that could have totally tanked us post 9/11 if the market didn't come back. Having the opportunity to go out and create the map room has been the single greatest thing that I've done professionally in my career. My only regret is I wish I had done it 30 years ago. But you have to see opportunity during challenging times.
Yeah, for sure. So, how have you seen commercial real estate change and the development opportunities? You're in that development space. How have you seen that change? Are people in New York? They are in the rest of the country. Are they still working a lot from home? Is there still a lot of remote? So, do you still have a lot of vacant office space there, like we do here in Phoenix? Hi, everyone. Tom Wheelwright here, CEO of Wealthability and Robert Kiyosaki's personal CPA for over 2 decades. You're listening to the Wealthability Show, where we help entrepreneurs and investors make way more money and pay way less taxes legally. Before we dive in, there are 2 big opportunities I'd like you to know about. First of all, if you're a CPA, join me and Robert Kiyosaki this July 16th, 17th, and 18th in Park City, Utah at the Tax Strategy Conference. Check out the link in the description below. And if you're a business owner who's ready to stop overpaying the IRS and start using the tax law the way the wealthy do, check out the Wealthability Accelerator. Go to wealthability.com/bonus.
We've had a better than average return to work swing here in New York. I think New York is probably the number one marketplace in terms of people getting back to work. We also happen to be the city with the largest net population growth in the last 12 months. We've had plus 89,000 new people have moved into New York. So that's a positive thing. But the development landscape here has changed very dramatically. We have, you mentioned office space. We at one time had close to 100 million square feet vacant. Think about that. There are only 6 cities in the whole country that even have 100 million feet. We had 100 million feet empty. We now have about 70 million feet empty because about 30 million of these square feet in 64 properties are being converted from office to residential. We have a very, very compelling tax abatement program that is incentivizing the private sector to do these conversions. The market, definitely people are seeing the opportunity. We have too much office space, most of which is very old and functionally obsolete, and we desperately need housing. Our policymakers here have not figured out how to stimulate new housing creation. So there's a huge demand to convert this older, obsolete office stock into housing.
So that's what's going on. That's how it's being taken care of. Is that you're actually changing the use to the residential use because that's what's needed. So you're always looking for what's needed.
Yeah, and if you look at the B and C, not to get too granular, but our B and C office stock here in New York is really suffering. Those buildings,
Right.
6, 7, 8 years ago were selling for 600, 700, $800 per square foot. They're selling for in the 200s today, some even below 200, which is below land value, even after you layer in demolition cost. So what we're seeing, and in the Garment Center, which is right where my office is, we have a Midtown South rezoning that is underway. It's gotten some preliminary approvals. We're waiting for final approval, which hopefully will come by the end of August, that will incentivize the demolition of a lot of these buildings. So, most people who are familiar with New York think the Garment Center is a little gritty and grimy. But I gave a speech a couple of months ago, and I said that if Midtown South rezoning passes in its current form, 10, 15 years from now, the coolest, hippest place to live in New York City is going to be in the Garment Center. And people were shocked I said that. But if you're in a neighborhood where half the buildings are going to be brand new, it's going to be pretty cool to live there. So lots of things changing in New York.
So that's an interesting question. So are you seeing that existing owners, let's say you've got an owner of an office building that is largely vacant, are they bringing in and renovating it, or are they selling it to a developer? Are you ending up buying that for one of your clients?
Yeah, well, unfortunately, most of these folks have debt on the property that is way higher than the building value. So they're unable to sell it unless they get the lender to go operate in a short sale. But it's the folks who are in trouble and being forced by the lender to sell the property that are transacting. And it's shocking. It's a very interesting time in New York in that different market sectors in terms of property type are moving in different directions at the same time. Certain sectors are doing really well. Retail properties are on the upswing. Hotels are the hottest sector in the market. Land values are going up. Industrial is still very, very strong. But then you look at our apartment building market, it's still facing tremendous policy headwinds. And then our B and C office sector, I thought 6 months ago, I thought we had bottomed out, but yet it seems like every week we're hearing about a new transaction that's occurring at an even lower price point. So don't see a bottom to that market yet. But this is why local market expertise is so important, because it's very confusing to have different sectors moving in different directions at the same time. That's never happened before. So it's very, very interesting times, and you have to really be paying attention to figure out what's going on.
Well, I've read you talk a lot about how important information is in the commercial real estate market. How do you sift through? How do you even find and sift through all that information? What are your clients looking for?
Well, clients are looking for insight, and one of the interesting points that I always find fascinating and mind-blowing. So I have clients, some of whom have very substantial portfolios. Maybe they own 20, 30, 40 buildings. But most of these folks are so myopic in their day-to-day activities. They're looking at their buildings. They have to refinance this one, renovate that one. The tenant's up for renewal. They're so busy working in the day-to-day activities of their buildings that they often don't take a time to step back or go to 30,000 feet and look at what's happening in the entire market. So we try to give them that insight. And so clients are always looking for, hey, what's happening in the market? The most frequently asked question that you get as a broker is, how's the market? And as Rod will tell you, most people answer that question with adjectives. The expert answers that question with statistics. We have two volume metrics. We have the dollar volume of sales and the number of properties sold. We have a value metric. Whether those numbers are going up or down and how much they're going up or how much they're going down really gives the client insight into what's happening in the market. So we always try to share that information with them for a couple of reasons. One, they want to know because what's happening will impact the value of their properties. But secondly, we want to make a good impression on them so that when they do want to transact, which is not all that often, because if you think about it, in Manhattan, using Manhattan as a microcosm, South of 96th Street, there's 27,649 buildings. Over 40 years, the average turnover rate of that stock has been 2.6%, which means in the average year, 719 properties sell. The highest that turnover rate ever was 4.3%. The lowest it ever was 1.2%. And if you look at that 2.6% turnover ratio, what that tells you is when someone buys a property in New York, they will own it for 38 and a half years before they sell it. So they're not constantly transacting. So you have to remain top of mind. And it's easier to remain top of mind if you can impress them with your market knowledge than if you just say, oh, the market's hot, the market's cool, the market's not doing so well, oh, we're really busy. It will leave a better impression that will make you more memorable and rememberable so that when the client does have to transact, they think about calling you.
So with information at such a premium in your business, where do you see AI coming into play? Because in most businesses, AI is dominating because it has all the information. Is it easy enough to get to the information so that you can use AI tools to identify, really what you're looking for?
Rod, why don't you go ahead and answer that?
Yeah, great. First of all, that's a great question, Tom, because AI, when you have access to the information, is an incredible thought partner. Never a thought leader, always a thought partner.
Right.
But that's where folks like Bob, right? Bob has primary information. So in the commercial side, the biggest provider of commercial information would be a CoStar and an up and coming Crexy platform, right? But you would need the access with your AI APIs to get access to those, and they don't allow that. They don't. So what does that mean? Even though with the great tools like AI, if you can have access to that market information, right, the way it works, if you have your own primary information, and that's why Bob's the GOAT. He has all the primary information. So you combine the primary information with the queries you want to in AI, and now you become the de facto. You are now the market leader of intelligence. You are.
So let me answer that too, because I want to tack on to that because I think it's really interesting. And I started the new business 16 months ago. My first hire was an AI guy because I love Dr. Benjamin Hardy and Dan Sullivan's books, and one of them is Who Not How, and the premise is when you have a good idea and you say to yourself, "That's a great idea. How am I going to do that?" You're asking the wrong question. That's a great idea. Who am I going to get to do this for me? So realizing that AI was becoming so popular through all my work with Rod, I said, I have to get on top of this. I'm not going to study AI and get to learn it. Let me hire an AI guy to come in. And so my COO is an AI guru. And so the way we're using AI is in two main ways. We use it for prospecting and deal execution, which are nothing more than funneling processes. We go from thousands of people to hundreds to dozens to a few. AI is great for that. The other way we're using AI, which potentially has the most power, because AI can do millions of calculations in a second, but is going to be the toughest for the industry to utilize, is in data interpretation. The reason it's going to be so hard is most data sets at least in New York City, are really horrible. You have a change in the head of research, and they have different ways to calculate things. And I always say that the absolute numbers are not nearly as important as the trends over time. How much are they going up or going down? How much are they going up? How much are they going down?
Sure.
But for instance, if I told you that in 2019, there was $26.3 billion of investment sales activity in Manhattan, you really wouldn't know what to think about that number until I tell you that at the peak of the market in 2015, it was 57.4 billion. And during COVID, at the bottom of the market, it dropped to 11.1 billion. So now the 26.3 starts to have some feel to it for you. And in the same way, it's the relationship between numbers in a data set over time that are really insightful and meaningful. And so we're fortunate in that I've always been a very statistics-oriented guy. As a kid, I collected baseball cards and always spent much more time looking at the back of the cards than the front of the cards. So I've always been into stats. So I have real estate data sets that go back to 1984, where the methodology for calculating the data has remained exactly the same. So in our data sets, we have true apples to apples comparisons. I don't think that exists anywhere else. And so we're applying AI models to these data sets to come up with some very intuitive and predictive things that we can get from the data. So it's been really, really cool. And Rod probably, I would say Rod probably knows more about AI within the real estate industry than anybody else. I mean, he spends time every day studying it, and it's really been fantastic to work with him and to understand all these things that are changing the way they are. I mean, I always say to people, when I started in this business in '84 at my desk, I had no computer, no fax machine, no cell phone. We carried rolls of quarters around to make calls from the payphone at the corner. And, you look at how much things have changed in the past 41 years. But I think that they're going to change even to a greater degree in the next 5, because AI is moving so quickly. And, the tool that we just got comfortable using that's 2 months old, becomes a dinosaur because something new comes out that's bigger, faster, stronger, broader, more powerful. And it's just moving so quickly. It's mind blowing.
So do you think that, do you see that the data is going to become more accessible, or is it going to still stay as difficult as it is, that you really need an affiliation with somebody like you in order to have access to that data? It's not going to be regularly public like in a lot of industries.
Yeah, no, it's not. The data does not exist in a form that can get by without some type of proprietary manipulation to it. For instance, I sell a development site. I sold a development site last year on the Upper East Side. It was a $77 million transaction. And anybody who looks at the public record sees, a sale of $77 million, and it was X buildable square feet. We're in an as-of-right zoning jurisdiction in New York, so you figure out or know what the buildable footage is, divide the price by the buildable footage, you get the price per square foot. That's what everybody believes the price to be. But people who are just looking at what's in the public record don't know that you had to pay $3.5 million on top of the price for a light and air easement to an adjacent property. They don't know that you had to pay $1.5 million for a first right of refusal on 2 adjacent parcels. They didn't know that you had to pay $10 million to 2 rent stabilized tenants to get them out of the building. So all of a sudden, the price is actually $15 million higher than you thought it was. And if you're relying on the public record, you go in and you compete on the next assignment with me, and you say, hey, the price per square foot was $400 a foot. And I say, no, it wasn't. It was $480 a square foot because you didn't layer in these other things that you were unaware of. So in each case, we try to, for land transactions in New York, I speak to the buyer and seller of every one and ask all these questions. Were bonuses included? Were contracts included to buy other things? Was there an environmental condition that required additional money in terms of remediation? You have to know, you have to break each transaction down on an apples to apples basis to truly make them comparable. And if you don't have that level of insight into the material, you could have the greatest, algorithms in the world. They're going to spit out bad information because you're starting with bad information.
No, it's sounds like a really good example of the who, not how, right? You've got to have good advisors, good team members. And Rod, that's kind of your expertise, right? Is you're coaching these team members. So if an investor were looking for a great broker and it wasn't, they wanted a particular slice, they're looking for particular expertise, what would you tell them, Rod, about what are you looking for?
You got to absolutely look at their track record, and as Bob shares, based on what you're looking to purchase. Was it a multifamily asset? Is it an industrial asset? Is it whatever it is? is that person the expert in that asset class? Because every asset class is a different set of rules and regulations, just from a negotiation standpoint and a business standpoint. If you don't know those little facets, you're going to leave money on the table. You just are. Way too many investors, and I mean this, way too many investors, commercial and residential, either don't use a broker, which is a huge mistake.
Right.
It is, because the money they'll save them is exponentially more than the commission they'll pay. But then they use the wrong broker because of a gut or a friend or worst case, a relative. Or, and I'm sorry, I don't mean to be negative here, you can't use a residential broker for a commercial transaction.
Right.
You simply can't. Nor should you ever use a commercial broker for a residential transaction. You shouldn't. So make sure the broker you're choosing has a clear, articulated success path in that specific asset class, and you'll be fine.
So if you were to just give investors, somebody wants to invest in commercial real estate, you would give them 3 pieces of advice, 3 things that they ought to be doing. Let's start with you, Rod. What would you have them be doing?
Number 1, get a broker. Number 2, just like I have a tax strategist, I have a CPA, I have insurance advisor, I have specialists because I don't know what I don't know, and I don't want to leave money on the table. So please get a broker. Number 2, have a long-term plan, right? Know why you're buying that asset and what the exit strategy might look like. Have that defined before you go into it. You need to know what success looks like. Often people don't define that. What does success look like when I do this transaction? And last but not least, make sure you choose vanity over sanity. I'm sorry, sanity over vanity. I got that wrong. Make sure you choose sanity over vanity. You want to be proud to own a building. That's, and tell your friends, look what I own. That's the stupidity. It just is. So always choose sanity over vanity when making a real estate decision.
I like that. What about you, Bob? What are the 3 things you'd advise people, investors to do?
Well, Tom, my practice is a little unusual in that, and my value proposition has been the same for 41 years. I only sell buildings. I only represent sellers. I only work on exclusives, and I only sell buildings in New York. So my opinion is choose vanity over sanity and overpay for buildings so that my clients do a great job. But what I tell sellers, similar to what Rod said, I tell my clients, choose a broker. Have somebody who knows what they're doing in your corner fighting for you. If you don't like me and don't want to hire me, go find somebody you do like and hire them. You need somebody in your corner to help you sift through this. There's so many people climbing around the market in New York today that every time I get hired, the owner has had offers. He's met with people. The neighbors for 20 years have said, if you ever sell, come to me. There are always interested parties. So a lot of it is just kind of orchestrating the right process to make sure that the seller gets the highest possible price. I always tell people, you can only sell once. There are no do-overs. If you sell at the wrong price, you can't get the property back and try again. So although there's no law that says you have to sell at the highest price, why not sell at the highest price? So, hire a broker, have somebody in your corner fighting for you. And, again, from my perspective, I'm just trying to get the highest possible price for my seller. I hope that the buyer makes money. I hope they're happy that they bought the building, but I really don't care that much. I just need to get the highest price for my client. And if the buyer does great, so be it. If the buyer does poorly, so be it. But I have a fiduciary responsibility to my seller to get them the highest possible price I can. And focusing on this one narrow value proposition makes life very easy. I never have conflicts of interest. I never have to remember what I say to anybody. All I'm doing all day long is just trying to get the highest possible price I can for my client.
I love it. You're an advocate. I love that. So I have to ask one last question because I'm a tax guy. I want to know your thoughts on, so this new tax bill is bringing back full bonus depreciation, certainly has an impact. How much of an impact does it actually have, do you think, in the marketplace?
Well, I think to the extent that it will impact the flow of capital, it's profoundly impactful. And if you think about this, most people make the mistake of believing that interest rates are highly correlated to cap rates. And it's not true. Cap rates are highly correlated to capital flows than they are to interest rates. And as an example, Tom, you're in Phoenix.
Right.
You said, so if I gave you $3 billion of equity and said, Tom, go buy up every apartment building you can in Phoenix, I guarantee you, regardless of what the interest rate environment's doing, cap rates on apartment buildings are going to go down
Yep.
because you're deploying that $3 billion in your market.
Right.
So to the extent that there's a tax advantage to deploying capital and more capital is being deployed, it will impact the market very profoundly.
I love that. That's a really great insight. Rod, any thoughts on that?
No, he's the best.
That was awesome. That was very well said. So the book is Selling Buildings, Maximizing Prices and Profits in Real Estate. You can show it again. There you go, Rod. And our guests have been Bob Knakal and Rod Santomassimo. And it's been a pleasure having you guys. Absolutely. And just remember that when you really get what I've gotten out of this is you get really focused, you get a really good team together, and you don't deviate from that. And when you do those right things, you'll always make way more money and pay way less tax. We'll see you next time on the Wealthability Show.
Thank you, Tom.
Thank you, Tom.
Thanks for listening to the Wealthability Show. If today's episode gave you a new perspective, remember this: the tax law is not your enemy. It's a roadmap. And when you know how to follow it, you can build real, lasting wealth. If you're a business owner or investor who's tired of overpaying taxes, the Wealthability Accelerator is your next step. You'll have the opportunity to work directly with me for 80% less than my standard rate. And I'll personally guide you through how to change your facts so that you can change your tax. Go to wealthability.com/bonus and apply today. Remember, it's not just what you make, it's what you keep.
This podcast is a presentation of Rich Dad Media Network.